What's up, YouTube? It's Joe Catapaglia sitting on the couch making some money investing in fractional real estate online, as usual. Um, Today, I'm going to talk a little bit about one of the main problems that I see with some of the fractional real estate sites, particularly ones where there is voting, where we have some control, like Lofty. If you're a Lofty investor, you probably know there's been a whole bunch of discussion on the Discord and through emails and a whole bunch of other places about the why home to manage properties and the vote for that. If you're curious how I am seeing a list of properties that's sorted by their management, I don't think there's a way to do this on the Lofty site itself, but you can do it on this Lofty Assist tool if you've tried that out. But so I was looking at this, and actually, I'm not sure that this is picking up all of them. I had heard a different number than this, but it's possible, either one, it's possible that this is right, but it's also possible that it's just not indicating it right on the Lofty site, and so then it's not pulling the API right or whatever that is. I don't really understand how websites are made, so I've just heard that term and throwing that around. Anyway, though, so there's a lot of disagreement, and I think it's getting really heated on this one because they're making, there's voting happening across a bunch of the DAO entities. And we all have very different, one, we might have very different properties, right, that are impacted by the decision in the vote, but we all also have different goals, a different outlook on, different experiences as far as how well our properties have been managed by this particular manager. Um, and so, there's already a lot of room for disagreement as far as, what's the best choice moving forward. But one of the things that really surprised me, and that I often take for granted. So, if you haven't watched a lot of my videos, I've been a real estate investor for 20 years. I was a real estate attorney for a short time, but I don't know that I've ever really mentioned, I started off, I got a master's degree in land economics and real estate, really a classically trained finance person, and went into, commercial real estate finance first, right? And so, I think there's a lot of investment decision making type tools and thoughts that I just really take for granted. And it made me realize that a ton of other people involved in this decision are completely unaware of some of these issues. So, and the big one I want to talk about today is the sunk cost fallacy, right? Like, if you haven't heard of this, um, you can go online, just Google sunk cost fallacy, and do it in, particularly as it relates to investing, because it's not, it's used in a number of different things, but in general, it's just the idea that whatever you've spent in the past, it's just already spent. And so it should be ignored when we're looking at our investments, the investments that we hold today and what we should do with them going forward. And so one of the things that keeps coming up, people keep pushing back on me and saying, oh, well, of course you think we should just move it to sale, or you don't really, you don't, because I'm somebody who's bought, if you've watched many of my videos, most of my tokens are all purchased in the teens or low 20s. So I own several tokens in a couple of these properties. Um, let's see if I can find the one that I own the most of. This is the one I own the most of. My average basis in this property is $22 per token. And so one of the things a lot of people have said is like, well, like, yeah, of course you think that because you own it at $22, but I paid $50 for this. As if that should somehow affect the decision going forward, right? And so that's what the sunk cost fallacy is. It's saying I paid 50 for this, and so that's a number of people have brought this up as a reason to try to hold the properties and turn them around. Now, this one I think is actually a poor example of this because you probably could just hold this. It was already cash flowing before. Um, so not necessarily the best example of a property, but some of them, really should just be sold. They're properties that are, well, and even that one, this is not in a great area. It's never going to be easy to manage. But regardless, many of these, the best use, the best return we're going to get going forward is to sell the properties. Many of these are just terrible investment properties from the perspective of their location, the types of tenant we're going to attract to them. And so, putting the money in to rehab them and just to rent them out and then to run into the same problems again, um, isn't a rational decision for a lot of these properties. But a lot of people spend $50 per token on token. And if we sell these properties, and they keep saying, oh, if you fire sale them, it's not fire selling. It's selling them for what they're probably have always been worth, right? I mean, for most of them, like it's not like we're in a hurry to sell. It's just that, um, they're just they're not. Some of them maybe we could improve the condition and sell them and do a little better, right? But a lot of them, it's just that we uh they're just not worth what somebody originally paid for them. And so if that's what's happening, that money's already lost. That 50, you make or lose money on investments when you buy them, right? And over time, especially when you're overpaying, right? People that bought a lot of these properties at $50, and this, 3 years ago, many of them don't want to take a loss, basically. And so, just because I will be making money on that sale and they might be losing money on that sale, it doesn't change what the best possible forward-looking outcome is for us. The only actual impact it might have is they might have a better tax treatment than I do because, um, I'll be paying tax on a gain and they're probably losing money, right? And so it's a situation where a lot of these, the very best use, the highest return for us would be to just turn around and sell some of them, take that money, buy other cheap tokens, get the next one roll sale, right? I mean, this is something I'm already doing on Lofty. I've had three real world sales go through now. Have a couple other ones that I'm working on. All of them have been very profitable from my basis. But it's also they're properties that holding them, we're not gonna yield any sort of return. They're in poor locations. They're properties that the simple fact is not every property is a good investment property, right? There's a reason that people like me do this for a living, where we actually help people find properties that are good. You can't just go and buy any home off the street, put a tenant in it, and think it's going to make money in the long run. It's very likely the case, um, that some of these properties will just always be money losers because they're in a poor market, because it's not an attractive property that's a property in neighborhood. So you're not attracting the type of tenants that are going to be good long-term tenants. Um, a lot of them suffer from this issue of the rents in the areas are so low that you'll just never be able to keep up with the capital expenditures, right? Like putting a new roof on some of these properties costs more than you're going to get in rent for 3 or 4 years. And so, um, you know, the, the decision that we should be making is what's the most profitable path forward, and that should be from what our value is today. It really should have nothing to do with what we paid for it in the past, right? I mean, whether because that money's already lost. If you bought it at 50 and it's selling at 20, you've already lost that $30. Now, is the fastest way to make money going forward with the asset that we have, is it to take this money, liquidate, put it into an investment that's working better, or is it to just try to double down, really try to push forward with some of these properties and get them to profitability? And even if you can do that, are you ever going to get back to that $50 token price? Like, it just shouldn't matter, right? Like that is clearly, for a lot of the properties, the um not the most profitable decision. But regardless of which one it is, because some of them that is going to be the most profitable, but whether or not it is has nothing to do with what price point you bought the tokens at, right? It will affect the actual profit that you make, but it won't change what's the most profitable decision from today forward, right? And so, even Jerry put that, a comment about that, in I don't know if it was an email to me. He might even put it in the announcement that, like, you have to remember some people are in these properties for a lot more. And it's like, I know he's a smart guy, but like clearly he's not um, trained to think like a finance person or an economics person, because that's, it just, or if he is, he has had a lapse. I mean, everybody makes mistakes. And I mean, you hear me make them all the time on here, right? I mean, it's especially when, I know I'm not particularly articulate. And so sometimes I'll say stupid things and think I said something different. But in any case, um, hearing that from him, but I bet I heard it from 15 or 20 people. Because I've spent a lot of time today talking to different people through Discord, through different messaging, and through my channel a little bit, and just from some different spots, and it by email and whatnot. Because now I'm finally getting to where I'm talking to a whole bunch of you guys regularly. Which reminds me, please like and subscribe. And if you haven't already, please join the Discord. That's in there's a link to it in the description to this video. If you are new here and you just happen to fall into this discussion, I do have links to all the sites I'm currently investing on. Um, some of them give you free money if you sign up. Some of them are much less of a headache than Lofty. So if you're a Lofty investor and you're looking for something that's a little bit different, you can check out. I really like Mogul. I've been buying little pieces of a lot of properties on there. Who knows what's going to happen with it in the future? But at the moment, it seems like they are just picking phenomenal properties when you compare their average property to, say, the average property that comes up on Lofty, or even a lot of others, Arrived, or any of the other main sites. But in any case, I have had just tons of these discussions. I got off on a tangent. Sorry about that. And the number of times that this concept came up, and I would mention, that's just sunk cost thinking. I was just really shocked by how many people didn't. I think most people have heard it, but they don't necessarily understand what it means, right? And so if that's you, right, if you're one of these people who's been thinking in the context of, oh, I paid $50 for this, I don't want to lose money. I just encourage you to spend a little time reading some articles on sunk cost fallacy, and why, as it pertains to investing, and why it is, um, why it actually hurts you as an investor, right? Because what it's doing is it's playing on our natural fear of loss, right? Because a lot of people think, I didn't actually lose money until I sell this token or I sell the property. But that's just not the case. If you bought it for 50 and it's 20 today, you've lost that money, right? So the goal is to look at, what do we have today? What's the most profitable path forward? And I think that it's perfectly clear we can all disagree on what that most profitable path forward is. But if some of us are anchored in this, I need to get that back to 50 so I'm not losing money. I think it's really harmful to the discussion, right? Because, um, you've lost the money. So let's figure out how to make more money quicker starting from today. And so, the absolute best return is certainly not to, get the property renovated and give us a 2% yield forever, right? I mean, that is, some of the ones that are given as examples of ones that are working, have really low yield still, and that's before a new layer of fees might get added. But that's aside. I mean, what I really just wanted to talk about is the way, when we're thinking about our investments, that it should always be forward looking from what we have today, right? Like, there's just never it's never helpful. Um, it's just never helpful to think about, well, what have I already spent on it, right? And then, so I've read a couple of kind of funny examples of this, and I think that they're good. Like, so one is like, you're in a relationship and you realize, I don't want to be married, or I don't want to marry this person, but I've been dating them for a year, and if we break up, that's wasting that time, right? Like, that's a non-financial thought about it. One that is a financial, a financial thought, but not necessarily a little bit different, is, they said somebody sitting in a movie theater, they realize they hate this movie. they're going to sit there and watch the whole thing because they spent $15 on it, right? Like that's a good example that starts to like tiptoe into the finance perspective, right? Because you're um you know, it's about money, it's about what I spend, but that clearly, like, it's really easy for us to see that, oh no, I don't want to spend the next 2 hours sitting watching a movie that I don't like just because I already spent some money. But for some reason, that I think is an example that people get. But then when you move it over into the investment world, um, you know, liquidating a property at $30 a token that you spent $50 a token on, um, when today it's only worth $30 per token, and there's no path to a good return holding it, you know, into the future, is where it just starts to fall apart for way more people than I expected it to. You know, hopefully this is a little bit helpful. I mean, you know, I know I've kind of beaten the point to death that I think that it's a. I just was shocked at how many people um, brought this up as an objection to like why I'm thinking about some of these differently. It's because I have a different basis than them. You know, it because it just like really, and so for one, it kind of like made me realize, you know, that a lot of the voting that's going on is a lot of the people involved in this, and you know, hopefully this isn't sound like too mean or condescending or something, but there's just a lot of people that don't really understand how investing works, or like you know what, you know, and I already knew that there's a like sort of a general lack of real estate experience, um but I kind of assumed that a lot of the people that would made their way here um were somewhat educated on like general investing principles, because maybe you came here after investing in the stock market or in crypto or something. But I mean, it really is clear to me that that's not the case. And I think one of the things that it made me wonder is if I should start to share a little bit more about like really fundamental, you know, economic and investing ideas that, you know, to be perfectly frank, I just really take for granted, and, you know, sort of assume as a baseline of, you know, that most investors that would be on here would be thinking in that way. So, one, I think, you know, obviously this was eye opening for me to see who's co-owning properties, that, you know, who are the people that are making decisions with me on properties that I own. Um, you know, one, it makes me rethink. I've been somebody who's been buying tokens across a lot of properties. And I know you can't buy a controlling stake, but it does make me want to buy larger stakes in properties, and maybe buy with groups of people, like, okay, get a couple other owners together, where, you know, we're maybe concentrated in, instead of buying 30 or 40 properties, maybe we concentrate in, you know, four or five, so that, you know, if we had, so we can have a little bit more control. Um, I think the problem with that is that, you know, I really enjoy the benefit of diversification that you get from fractional investing that you don't get elsewhere in real estate, right? So, at least not with a direct, not any other direct ownership method of real estate. So, I don't know. It's made me think a little bit about that. So I guess my questions are to all of you, and I know I've talked to a lot of you now, some in real life, some through, you know, online, and please feel free to reach out through the comments with this, through the Discord, if email me if we've been emailing back and forth. But one, let me know. Do you think it would be helpful to just talk about some like general, basic real, not real estate, but investing ideas, things like the sunk cost fallacy, and I'm sure that there are plenty of others. This is just the one that continually came up today because so many people know me as the person who's got a has a really low basis, and almost all the one, you know, I'm very rarely buying anything that's not discounted, right? And so, um, the number of people that said something to me about that, as if it should, you know, make a huge difference in the way, you know, what I think we should do and what they think, um, made me wonder, like, what else am I just assuming that everybody what other knowledge am I assuming everybody knows about? So one, if there are just general investing topics that we should talk about, like I'd love to know about that. If you think that this is like doesn't apply in this situation for some reason, right? Like I where it actually should matter that they paid more than me. And the only thing that I can think of is yes, it does affect your basis, and so it can affect your um, tax position, right? So I was trying to really think through like are there good arguments for this? And this was the only one that I came up with, right? And so okay, we buy tokens or we have tokens right now that are say $10, and we can triple our money on it if we wait, you know, if we execute in a certain manner. Um, or you could do say 20% better if we just sold that token and sold the property and then went and bought other properties on the platform that work better or invest somewhere else. And if we were to do that, all the profit from $10 all the way, all the money that we make from $10 all the way up to 50, none of that's actual profit from a tax perspective. I mean, I'm not giving you tax advice, but from my understanding of this, right? Because all the way up to 50, you're actually making a tax loss, right? And so that's the only reasonable argument I could see where okay, your higher basis means that all the improvements that you do to that one, um, you're not going to get taxed on that in the same way you would if you liquidated. Okay, that's not, you lost money, so you didn't get taxed there. But then you go and make a bunch of money on the next one. Well, then that's actually money that you made. So I think that's the only reasonable argument. But I think that it is. I think that you know I just don't. I don't know. You'd have to really understand, like, you you'd have to have very close options, right? And I think, and that's the other thing. Like, all of this is not to say that I think what I think we should do with each property is the right answer, right? Because there are other things that we can have, different outlooks on. So, for example, we might have a different opinion of how effective one manager is going to be over another, and or how well the property could perform if it was managed really well. That's one of the things that I think there's some very overly optimistic people in the discords, that I've had discussions with that just think like, oh, all the problem is the property managers are doing a terrible job. Well, if you own a no matter who the property manager is, if you own properties in D plus neighborhoods or C minus neighborhoods, or some of these have pretty good ratings, but some of them are just terrible. Um, it doesn't matter who the manager is. It's not easy to make money, and you're going to have problems, and and especially when it's in markets where they're very tenant friendly. A lot of tenants are going to just abuse you as far as the process of having to evict them and whatnot. So I think that's something that I've noticed. There is a big disagreement in how what the future outlook is for some of the properties, and I think that's normal to have, right? And so that's part of the discussion that we need to be having as co-owners when we're trying to vote on what to do. But then the other thing is we have different opportunity costs, right? And so, obviously, all of us could go and invest if we liquidate one of the properties. Where do we put that money, right? And all of us could go and put it into another token on another property. That's not what I'm talking about. But some of us might have deals that we're doing offline, right? Like that we're not, or that we're doing on other sites. And so those might not look the same, right? Like, so one of the things that strikes me is somewhat surprising is that there are people, and there's people that invest on Arrived, and they're happy to get their 4% dividend, and maybe in the future someday they'll get some appreciation, although a lot of times when you even use Arrived Zone Calculator, a lot of that appreciation is eaten up by the fees, right? And so your returns are, you're you have mid to somewhat high single digit return projections, even when they have very strong appreciation projections. And so, some people are happy with that investment, right? Because they don't see that they have opportunities to do better than that on risk adjusted basis. I think most of the people that are investing in Lofty don't see that, that lower return as a good option. Although I think some have been like really scared by, they bought $50 tokens that were supposed to have a good yield, and they didn't really understand that, how terrible a lot of the properties were as far as, just not a good choice from an investment perspective. Um, they just basically saw the token, saw what the yield was, and said, okay, let me buy that. And so, where was I going with that? Just talking about how, oh yeah, so we have different opportunities, right? And so for me, for especially, at the moment, I'm still just experimenting on Lofty, right? Like I don't have a ton of money on there. I don't have a ton of money on any of the other sites that I'm talking about. Um, you know, the vast majority of my net worth is still just in private mortgages on properties that I bought the property all cash, sold it and held financing, and and collect payments over time. And I get, that's I do that here in San Antonio. Where most of my personal investment dollars are, and I get fantastic returns on those. And so, to pass over dollars into that, so for example, but I'm doing really well, very happy with the returns I get on Lofty as well, right? I think that, if you watch some of the, especially the ones where we're buying the cheap tokens and liquidating them, and some of them are really ridiculous when you look at them on an annualized basis. But in general, because I have this other place where I know I can reliably get a certain return, I'm not excited about, okay, let me just hold on to this and let me get a 2% yield or a 4% yield or whatever it is. And then maybe someday this becomes a $50 token. Now, if that is the math that we're doing, right? We're looking at, where else could I put my money going forward? Like, yes, we have different opportunity costs, and I think that's a legitimate spot for us to disagree, right? So our outlook on different strategies, like how they're going to actually perform, I think that makes sense, and that's a good thing to discuss. Are, the different options of where we're going to put it? Like, are we getting the best return that we could, just keeping it, doing whatever with it? Um, Although I think arguably, even if you said the only alternatives we're looking at are other Lofty properties, um, I think very few of these would be ones that we said, "Oh, excuse me. I need to start doing these a little bit earlier." No, sorry about that. But so, even if we thought that Lofty was the only alternative investment, right? We're just putting it in other tokens. I think that we could very reasonably say there are better yields, or better deals that are going to have a better overall ROI over our holding period. Um, but yeah, I think that because people are sort of stuck on this idea of how much they paid for it and don't, because that's pulling at their emotions of like, oh, if I sell this below this, or if we do whatever we do with it, I'm going to lose money. It's keeping us from really, on a granular level, like talking about, what's actually the best decision with those properties. I mean, uh, I just keep seeing the term, I don't want to fire sale this. I bought it for $50, like that sort of thinking. Um, and I think until we get past that idea, which is just, and this isn't like, I mean, that is just a clearly fallacious argument, right? Like it fits perfectly into the sunk cost fallacy. But like I said, I mean, if you have a good argument of why that should actually matter, I would love to hear it. Um, but that's it. I think now I've definitely rambled way too long about this. If you are still watching this, I appreciate that, you being somebody who watches my videos to the end. Um, yeah, please, and if you're not, if you haven't already, please jump in the Discord because we've just been having a lot of fun talking to other investors in there, and that's the one that's in the link to the description of this video. In any case, until next time, I'm just going to keep making mistakes so that you don't have to.